Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alright, so today we are going to start our lecture with chapter 2, risk and return of a single asset. Okay, number one, let's have a look at the definition of risk and return. So what is risk? Okay, risk is the uncertainty about the size of future return on a principal amount of money invested. So look at the word uncertainty. Okay, it means that something that we are not sure about, we are not confirmed with. Alright, so that is risk. Okay, so we don't know how much is the return that we will get from the investment. So that's why we call it as risk. Okay, risk also can be defined as the chance of financial loss, or more formally, the variability of returns associated with a given asset. So, from the investment, because we don't know, okay, how much the return that we will actually get. Okay, so that's why we call it as a financial loss, chance of financial loss. Okay, so for example there, okay, the government bond has a low risk. Okay, because it is granted by the government, okay, to pay the bondholder the return, okay, of the fixed income security ataupun of the government bond. While the common stock is a high risk investment because we are not sure, we don't know yet how much the return that we will get from the investment. So that's why it has a high risk investment. Okay, next, look at the returns. So what are returns? Okay, returns are the rewards from the investing received in current income, okay, in terms of dividend or capital gain. So capital gain can be also known as capital growth of the price appreciation. Alright, so it means that the total return comes from the current income, okay, in terms of dividend tadi, and then plus with the capital gain. Alright, so the rate of return. So what is the rate of return? Okay, so the rate of return, okay, as given in the example here, if you have 1,000 investment, okay, and then you get 80 ringgit return, okay, from the investment. So the rate of return is 8%, okay, 8%. So macam mana dikira the 8%? So 80 divided by 1,000, okay, times 100 lah, okay, because dia kata kat sini the relationship between the total rate and total return and principal amount invested expressed in annual percentage. So if we want, okay, to know how much is the percentage, okay, so we divide. Alright, so that is the rate of return, must be in percentage, so 8% here. Okay, next, the risk and return trade-off. Okay, alright, so the risk and return trade-off is a positive relationship. Okay, it means that high risk associated with high return. Okay, and then low risk associated with the low return. Okay, so the investor is willing to take high risk. Okay, so normally they will get high return. Okay, but then if the investor is willing to take low risk, so the investor will get low return. Alright, so that is the trade-off between risk and return. Okay. Alright, so next here is security market line, SML graph. So in the SML graph, okay, it shows that the relationship between risk and return. So as you can see here, the x-axis represent the risk, alright, and then the y-axis represent the return in percentage. Okay, so here, if you are willing to take more risk, okay, makin ke kanan ni more risk lah. So start with the 0. Okay, if let's say the beta 0.5, 1, 1.5, 2. Okay, so you look at here the SML line ni, okay, is ascending to the right. Ascending kan, nampak dia menaik. Alright, so if you are willing to take more risk here, okay, you will get more return. Alright, so this is only to show you the relationship between the risk and return. Okay, the positive relationship tu. So that's why the SML tu, okay, the linear equation tu is ascending to the right. Okay, so what is A and B? Okay, let's have a look at the next slide. Okay, so from the graph, the SML shows that a person who assume higher risk can expect higher return. So macam tadi lah kita tengok, if the risk increase, and so does the return. Okay, if he selects an investment below the line, okay, which is the A area, okay, he will assume high risk but low return. Okay, look at back at the graph. So this is area A. Okay, higher risk but low return. Alright. Okay. Alright. Next, if he choose an investment above the line, which is the area B, yang ke atas, beyond the SML just now. Okay, so he will assume low risk but high return. Therefore, an investor should attempt to invest in investment in area B and avoid investments in area A. Okay, so kalau kat sini kita tengok, so we are going to choose, as a smart investor, they are going to choose the investment beyond the SML line, not below the SML line. Alright, so that's the idea. Okay, next, so this is a risk preference behavior or investor attitude toward risk. So ada 3 types kat sini: risk averse, risk indifferent, and risk seeking. Okay, so let's have a look at the explanation. So the 3 basic risk preferences. Risk indifferent investor. The required return does not change as risk goes from X1 to X2. So maksudnya dekat sini, in essence, no change in return would be required to the for the increase in risk. They're normal, then they're natural about the risk, nampak? They're indifferent, in the middle. Tengah-tengah tu. And then risk averse investor required return increase for an increase in risk. So ini normal lah. So if when the investor will need to take more risk, so they expect high return. Alright, so this is normal. And then for the risk-seeking investor, required return decrease from an increase in risk. So this one is people who enjoy the risk. This investor are willing to give up some return. It doesn't matter, for him to take more risk. Alright, but then as overall, most investors are risk averse. Meaning to say for a given increase in risk, they require increase in return. So inilah ada yang types of normal ataupun the majority lah, the investor are risk averse. Okay, so I think that's all for the video. So next I will continue with the measurement of risk. Thank you.